Welcome to the monthly market report for May 2021. I'm Mac Rogers. I'm a real estate broker here in the East Bay in the San Francisco Bay Area. For the next few minutes, I want to give you the insights in the US real estate market. There's a lot going on right now, and we'll start right here with a quote from Freddie Mac. It comes from Sam Cater, and he says this: "The main driver of the housing shortfall has been the long-term decline in the construction of single-family homes. That decline has resulted in the decrease in the supply of entry-level single-family homes or starter homes. Probably no bigger issue right now that we need to be talking about than the lack of available inventory across the country." Now, we've talked a lot about this if you've followed the monthly market report. So let's talk about this just for a minute. The census released this information: single-family housing units completed by decade, and you see the deficit over the last decade between 2010 and 2019. We're just 6.5 million homes completed in this country, whereas the other 4 previous decades only won just under 10 million homes. So a significantly less number of homes on the market than what we've seen in the past. And simply right now, the amount of housing in this country is not keeping up with population growth. A lot of this is because of the hangover from the housing crash back in 2008. And builders being hit hard there. I was having this conversation just the other day with a client. They had just sold their home and they brought it up, the C word. Crash. That topic of crash is what a lot of people are talking about. Google reported that just a couple of weeks ago that the search question, "When is the housing market going to crash?" spiked almost 2,500 in the past month. So a lot of people talking about that, a lot of people wondering, is this like the last time? I'm not going to go deep into that today. Last month's monthly market report, I gave all the information about that. If you missed that, or if you want to go back and watch it, you can see all the ways that this market is different and how experts don't expect a crash in the US real estate market, because this time we're not dealing with an issue in the housing market. We're dealing with the lack of supply, and I'm going to talk a little bit more about that now. So let's talk about inventory. This is a slide that I've shared before, the year-over-year changing in listings. New listings represented by the green bar. You see that coming up right here. I'm going to talk about that. Be careful how much of that you believe. Total listings there in orange, now turning into a red bar, down 53% across the country. Now let's talk about the year-over-year change in listings, why they're spiking up right now. This is a look at listings as compared to this time last year. And so what was happening this time last year? Everybody was pulling listings off the market when we were in a lockdown during the pandemic. And so, of course, we see a spike in the change in listings, this time this year as compared to the same time last year. So a reason for that, look right now at week over week inventory listings. Starting to hear a little bit more about inventory starting to increase a little bit across the country. And we're here in the spring, but don't be fooled by some of the headlines that may come out and show some pretty amazing jumps in the number of different metrics that compare this time to last year. Because of what we were going through in this country due to the pandemic and the lockdown across the country, you're going to see a lot of that. Take a deeper look as you hear about those things. Look at the numbers and compare it to what's going on last year and this year. So what normally is happening during this time of the year with inventory is we're starting to gradually increase. So if we look at 2020 as compared to 2021, we are starting off in December of the prior year, 2019. You see this growth of about 100,000 listings in the first quarter of the year. And what happened this year? We've stayed relatively the same, just 10 to 20,000 listings added over those 3 months as we've gone into the new year and started to go into spring market. So typically we see more people saying, okay, this is spring, we're going to put our home on the market. Inventory is growing, and certainly coming out of the pandemic, maybe more people are feeling confident about selling their homes. But we want to still see that come back to the market, and haven't seen those people put those listings on the market as of yet. NAR just came out with this. Demand remains strong as home buyers are snatching quickly off the MLS, and it takes approximately 18 days for a home to go from listing to a contract in the current housing market. A year ago, it took 29 days. Listen, 29 days is a quick amount of time. 18 days is even faster, and we're in a fast-moving market. Here in the East Bay right now, that is down to 7 days. We talked about this and how quickly homes come on the market. They are purchased even quicker. So the velocity of the market is there. We just don't have the time for those homes to become inventory in the market across the country. So I just want to continue to remind you guys that things are moving so fast. The question now starts to become, when will we start to see listings come back into the market? Well, we're getting a look at that from Pulsenomics, and they say this: 43% of the economists they surveyed said that the US housing market will grow in the second half of the year, when folks feel more confident about going out and maybe having people in their homes. Builders are building more, certainly seeing some headwinds on the rising cost of lumber and the rising cost of supplies. Those that have put off putting their homes on the market, all of those things coming together to bring more inventory back into the market. Economists certainly saying we're going to see that in the second half of the year. What we want to start talking about right now as we look to the second half of the year and realize the market we're in is why would people want to sell right now? NAR came out with a study and did a little bit of a deeper look at that. Here are the top 5 reasons why homeowners plan to sell this year. Number 1, the home no longer meets our need. This is coming through the pandemic. The needs that we had in a home have changed. It's now the central point of our lives, and there's a lot of things that we did. We want something that will meet those needs going forward. Number 2, we can make a profit in the current market. This is filed under the we can sell our home for how much? My wife and I actually talked about this, and we do have a number in mind that if we can get that, we will definitely sell. What about you? At what price will you become a seller? Or will you consider selling?
$1 million.
Would love to hear your comments below. Right now, a lot of people are saying this may be the time to sell given where this market is at. Number 3, we want a smaller house, less work. We want something that we can maintain a lot easier. Now I tell my clients, be careful of this one, because when you are used to lots of room, not only space for people, but also space for all your stuff, it becomes a challenge to downsize. Number 4, we want to live closer to friends and family. No doubt a byproduct of the pandemic that relationships in those that we're close with have become so much more important. I saw a lot of this in the early months of the pandemic. People moving back to be closer to their family. For me, one question here that I believe will have another impact on us is that as we get back to normal, more and more companies will ask their employees to come back. What will those workers that move do if they are asked to come back? I know a lot of Facebook, Oracle, Google, and other tech employees in the Bay Area that has moved all across the country when the pandemic was in full swing. Now, I don't have an answer to this, but it's something that I'm keeping an eye out. Number 5, we want different features and amenities. So many people thinking, you know what? There are things in a home that we want given the last year, and space tops the list. Being cooped up inside our homes, not only living, sleeping, eating, but also working, going to school, that certainly has been a driver for a lot of home buyers. You know, the other thing that's very apparent right now is that the attitude towards owning a home has started to shift in this country. And I want to talk about that for a minute because it's an important trend. This is from the NAHB Prospective Home Planners to Buy a Home in the Next 12 Months. 16% of American adults are considering the purchase of a home in the next 12 months, according to the NAHB's Housing Trends Report for the first quarter. So what you see there are the first quarter of 2020, about 10% of the people saying we're planning on buying a home. It jumped to 16% by the beginning of the first quarter of this year. What does that mean? Well, the attitude towards owning a home and buying a home has shifted during the pandemic. It's very interesting. You know, coming out of the last downturn of 2008, people spoke about whether buying a home is still the American dream. But if you remember, a lot of those conversations are with people losing money in their home. Do we want to go out and do that? Is that still a wise investment? Maybe people will rent. Maybe they'll decide to do something else, and maybe owning a home is not the American dream anymore. Well, today, coming out of the pandemic, there's very clear signs that owning a home, home ownership, all the things that means to people, tangible and intangible, has dramatically changed people's views on home ownership. Seeing more and more people want to own a home, and I think there's a lot of that that's due to the home being the epicenter of our lives for the last year. Where we went to school, where we work, where we ate, where we spent more time with our families. And certainly as we come out of this, I don't think that's going to be the situation forever. But people remember that, and people say, you know what? That's important to us now, and we want to own a home for that very reason. Let's talk about equity and take a look at the equity picture. The average profit for a home seller increased 26% over the last year. A big jump there in the average profit. I think that's one of the questions you should know as a homeowner. How much equity do you have in your home? And oh, by the way, the average seller in the first quarter netted $70,000 out of the sale of their home. The real message here, and you've heard me talk about this before, that it's not a bubble. It's simply a lack of supply. That's a direct quote from Lawrence Yun. A lot of talk about the Google study, thinking this is a bubble when really it's a supply and demand at work. Anytime there are fewer of an item on the market, it's going to keep that upward pressure on prices. And what we're seeing right now across the country, in just a minute, I'm going to get into forecasting what experts are saying about prices coming up. And that's going to be important as we turn the corner to the second half of the year. But remember, it's a lack of supply on the market versus anything else interacting right now. And certainly, we're seeing a lot of frenzy in the market. One of the things I want to talk about, keep you up to date, is a forbearance update. Last month, we didn't go deep into forbearance. I want to give you kind of a snapshot of that. There's good information coming out for those that are in forbearance and want to continue to update everybody. I think this is a topic we continue to talk about. There will be those that are affected by forbearance that will need help. The number of active mortgages in forbearance has been unchanged for the last several weeks. But if we go back to May of last year, we're seeing this drop in the number of those that are in forbearance. Over the last 2 months, 400,000 people have left forbearance. It kind of happened, and not a lot of talk about that, but they're coming off of forbearance. This is certainly good news. Remember, you could do the initial 180 days, apply for an extension for 360 days. So we're a year later now, expect more people to roll off forbearance. Now, the big question is what's happening to those that are in forbearance? And there's a lot of things being thrown around about the CFPB doing something, and are there things that are going to be done to push foreclosures out even further? A lot of that is still pending, and we're going to comment on the pending legislation as we know more about this, and I will bring that information to you. But right now, upon exit of a forbearance plan, if you've watched my videos, I've used this pie chart for quite some time to describe this. 47% are paid in full of those that came out. Now, this is as of the middle of April. 36.5% have worked out some sort of repayment plan. 16.2% still in trouble. Let's look at this over time because that's really the question. So this goes all the way back to the start of the year. The green section of the pie started out at about 52%. We're at 47%. So it seems a slow decrease in those that are coming off of forbearance paid in full. Sort of to be expected as we go on and see that decrease. We've seen an increase though of those that are working out a plan on the blue bar. Started out at 32.5 and it's up to 36.5. What stayed relatively unchanged and is up just a percentage point are those that are still in trouble. So what we're seeing is less that are paid in full, more getting a workout plan, and staying relatively flat on those that are in trouble. I'm going to continue to watch this because I think this is important, and it's important to know that for those that are affected by the coronavirus, you can still avail of forbearance. If you need help, it's out there. Rick Sharga from Realty Track said this, and I think it's very interesting. Quote, "I think the math speaks for itself how well the forbearance program has worked. It's one of the few times in my career I've seen a government-initiated program adopted as well and executed as well by the industry as this one." Unquote. I talked about this forbearance program that's being put out there, and that the government and the banks certainly does not want a repeat of 2008, and they are doing everything that they can to prevent that. As I have mentioned in my previous videos, forbearance will not crash this market. At worst, it could be a soft blow. The Wall Street Journal recently reported on the economy. Consumers were more upbeat about their income prospects last month, and many appear eager to spend. The survey found 8.9% of Americans plan to buy a home in the next 6 months, the biggest share of records going back to 1978. It's a little bit different from the National Association of Home Builders study that we saw, but still a lot of people saying we want to go out and buy a home. A lot of people optimistic about spending and the economy improving. Expect to see more and more of that as we go through the next few months. You know, during the last downturn in the housing crash, it took about 9 years for the economy to return the unemployment numbers, all the things that go with that. We're looking at seeing something here in just over a year, returning back to a very robust economy before the pandemic. Let's talk about what's on the horizon, where we are right now, and what experts are saying in the forecast that they're making. Mortgage rates right now, this is an important story. We ticked up above 3%. We still sit right now just below 3% on the average 30-year fixed rate, 2.98%. The dramatic fall last year, still very good long-term financing for those looking to take out a mortgage. The other thing that we have to keep in mind is mortgage rate projections are that they're gonna go up. And I'm not here today to make a projection exactly where they're going to be and when. But I think it's safe to say it's just a matter of when they're going to go up and by how much. Will it be 3% or 3.75%? It's probably going to be somewhere in the middle. But we are going to go up as the economy improves. You can certainly bank on that. The interesting thing as we start to talk about rates is, one, where we stand today, just under 3% on the average 30-year fix, but also where we're going. You know, this right now, this red bar represents right where we're at and where we are projected to go by Freddie Mac. And you can see here on this slide, 2018, 2019, and the slide 2020 last year, we're still in a very good spot for those looking to take out a mortgage. So if you're still planning on buying a home, the rates are still very good. We started off this monthly market report talking about the lack of supply pushing home prices up. We're seeing home price forecasts come out, and just about everybody that forecasted prices at the beginning of the year has adjusted their forecast and adjusted it up in what they're saying is going to happen this year. The average of all the forecasts are about 6.8% home price appreciation this year, and expect that to continue on as we see the lack of supply across the country. The middle here, around 6-7% appreciation, very healthy appreciation going into this year. Here in the Bay Area and in the East Bay in general, that most likely will be more than double digits. I wouldn't be surprised if we end the year up 15% to 20%. Now, the big thing that has come out this month is that forecasters are projecting we are going to sell more homes this year than we did last year. If we look at Fannie, Freddie, and the MBA, and we look at what sold last year, well, last year in this country, we sold 6.5 million homes across the country. We're projected to sell over 7 million homes this year. So a very good market. Now, the interesting thing is as we go into 2022, still a very good market. We're projected to sell over last year again, over 6.5 million homes in this country. So a couple of good years coming up in the housing market, and we're going to sell more homes this year than we did last year. Something to keep in mind as you yourselves are thinking of either buying or selling this year and next year. So for those people that are wondering about, will this continue? Will the market sustain itself? And certainly experts are saying that end of this year and next year still looks good. I want to wrap up on this quote that we have from a legendary Japanese swordsman. Perception is strong and sight is weak. In strategy, it is important to see distant things as they were close and to take a distance view of close things. The perception out there right now is that we are in an overheated bubble. Certainly, prices are up and up big. There's no denying that. But what is causing this increase? Is it irrational exuberance, as Alan Greenspan once said? Or are the fundamentals behind it solid? We're going to have a very good year this year. And as we turn the corner, experts are saying more inventory is coming back to the market. But if we get caught up in everything happening right now here in front of us, we may miss out on what's coming. And the question is, right now, are you prepared for what's coming? Listening to experts and say, okay, what is being forecasted for the second half of the year? What is being forecasted for the summer? so that you're adequately prepared. I want to thank you for taking the time to watch the monthly market report. We have a resource that's coming out this June, our buyer and home seller summer guides. If you want a copy, simply click on the link below. Two great resources to help you make your home buying and home selling decision easier. I'm Mac Rogers. I'll see you on my next video. Have a great day.